Well, Morgan Stanley believes that the banks and the larger ones are going to outperform the index as well as outperform the general market in 2022. What it believes is it's going to be led, or the catalyst for this outperformance is going to be PPOP growth, which is pre-provisioning operating profit. That number is going to be aided by a higher loan growth as well as a turn in the interest rate cycle. The higher loan growth, of course, is already being seen in the system over the last week or two. When we look at loan growths across the banks, whichever have reported it, in fact, HDFC Bank has seen 16.5% loan growth, AU Small 33%, but even the IDFCs, the Federal, the CSB, as well as the IndusInd have seen 10 to 12% loan growth. So a strong set of growth numbers coming through from the banking system in general. With regard to increasing interest rates, of course, we are seeing an increasing interest rate environment across the world at the moment, and there is an expectation that the RBI too will follow suit. It cannot ignore other banks, especially the Federal Reserve, increasing interest rates for long. So it's likely, and a lot of brokerages do have a view, that there will be a 1% interest rate hike over the next year or so. And with that, of course, the likely beneficiaries or the direct beneficiaries of that is going to be banks, and in particular the larger banks. On the second front is going to be credit costs. So what Morgan Stanley believes is that credit costs are going to start trending downwards. It's going to start moderating, and for the larger banks, it's possibly even going to start undershooting. So when we look at some of these trends, there is obviously going to be a growth in profitability. On the valuations front, Morgan Stanley says that banking sector in general has underperformed the Sensex over the last couple of years, and with it, balance sheets and profitability are now much better, and the visibility for that is much better going forward. So Morgan Stanley believes that the larger banks are going to definitely do well, which means that they have picked ICICI, Axis, HDFC and SBI amongst their top picks. And within these pockets, they expect to see at least a 25 to 35% increase or outperformance with regard to their stock prices individually for each of the banks. So ICICI Bank, they have a target price